All right, everybody, we are going to do a quick update on Kohl's. Now, full disclosure, I'm invested in Kohl's. I made my first video on Kohl's, I think about a month ago. The price was a bit under $8. They released their earnings. It was a pretty good earnings report. We took a look at it. Definitely was not as bad as many people were thinking. The stock was up after earnings. In fact, this was a crazy day where the stock went up all the way to about $10, then it came all the way back down. Over the next week, it went back up to $9.50. Now it's down to pretty much right back where it was a month ago when we did our first video on this. So it's been a bumpy ride, but today we're just going to go over a couple things that have happened in the past few weeks. We're going to retake a look at our bull thesis, and then I'm going to tell you what I'm doing here. Morningstar, by the way, says Kohl's is worth $40 a share, so 5 times what it's trading for today. They are saying Kohl's is pretty much the most undervalued stock in the stock market. So let's get into it. Now, why Kohl's? Why are we interested in this boring retailer? Well, Kohl's is trading for about $900 million today, and they are still massively cash flow positive. So yes, cash flow from operations is lumpy, but they've generated over $560 million in cash flow in the past 12 months. Again, this is a $900 million company, so they're trading for like 1.5 times their cash flow from operations. Now, their GAAP earnings, their accounting earnings don't look as good because they have a massive amount of depreciation. Because they own so much property, they can take depreciation against that property to reduce their earnings and pay less taxes. But it makes it look like their net income is lower. Now, speaking of property, this is definitely a big part of the bull thesis behind Kohl's. Kohl's owns just a massive amount of property. I mean, over 400 stores and all their distribution and fulfillment centers. I want to quickly go through this little sheet here. This is just Kohl's fully owned properties, and this was put together by a Reddit user. The user is Environmental Row 217. I don't know who they are. They clearly did this with the help of Gemini. Hope they're okay with me sharing it. Basically, we have all their fully owned properties, and Gemini just estimated a low, medium, and high price per square footage of store. Now, Gemini here is not taking into account the value of the acreage, the actual land that's under the store. For example, this property here in Alabama is on 11 acres of land. They're not really factoring that into account. So I think a lot of these estimates are low. Also, we're not looking at any of the ground lease properties that Kohl's has. A ground lease is where Kohl's owns the building, but they lease the underlying land, usually for a really long period of time. Ground leases can be many, many years. We're not adding in the value of any of those properties here. Down here, these are their distribution and fulfillment centers. So when you sum it all up, again, this is low, medium, and high. Maybe I'll make this a little bit bigger here. You get these property values. Again, I think these numbers are quite low. Doesn't take into account the acreage, doesn't take into account the ground leases, but conservatively, let's just say $5 billion for the value of these properties. Again, Kohl's is trading for $900 million. Now, they have debt, so you can't just compare $900 million to $5 billion. But still, just doing like a really quick back of the envelope calculation of what would be the value if they just liquidated everything, if they shut their doors tomorrow, they had just a complete fire sale event. I'm assuming they would take a 50% haircut on their inventories. They pay off all their non-lease liabilities. You're left with these numbers here, which in terms of per share values for this, you get like $17 a share on this middle line. Again, I think this is lowballing it, but that's more than double where Kohl's is trading for today. And this is looking at the value of net assets in a bankruptcy-like event. Kohl's is very cash flow positive still. Now, I'm not saying anything like a liquidation event is going to happen. It's not. And some of the assumptions I made here aren't realistic. I mean, I'm assuming they can get out of their leases. They wouldn't be able to get out of all of their leases, but I'm also not giving full value to a bunch of their assets. So just think of this as a rough calculation. The stock price today is $8. This is a cash flow positive business where if they shut their doors today, I think they're worth more bankrupt than they're trading for right now on the stock market. That's the thesis. It's really simple. Now, another thing that's interesting is Kohl's is either the most shorted or one of the most shorted stocks in the stock market that is not a microcap. It currently has about 50 million shares sold short, so that's a little under half of the total shares. It really did look a couple weeks ago like we might be seeing the start of a short squeeze. The cost to borrow, which represents the fee that a short seller would have to pay to borrow shares and then short them, just shot straight up, just went absolutely to the moon. So this is telling us that the shares available to short were basically going to zero, which increased the cost on short sellers. And this is kind of what happened with GameStop. It led to sort of a domino effect of short sellers being forced to cover their positions. Now, that didn't happen here. The pressure is off of the shorts. The borrow fee is down to, a more reasonable level. So this story looks like it's fizzled out a bit for now, but who knows, with the short interest this high, it really wouldn't take much of a catalyst for this to shoot back up and the pressure to be back on. In a couple weeks, in a couple months, it might be a different story. But right now, that's where we are. So what am I going to do with Kohl's? Well, I am just going to wait. I mean, how long can the stock stay down here? How long can the stock be so undervalued compared to its assets? A long time is the answer. I don't know how long I'm going to have to hold this, but I'm happy just doing nothing here. I think I'll be rewarded. I think at some point the stock will be significantly higher than $8 a share. I just don't know when that will be. It could happen in a month. I might have to wait here a few years. The stock could go lower. I mean, I just posted a video a couple days ago about StoneCo stock that I was buying in the 11s, and pretty quickly I was just down 25% on my position. This was a growing company that I was buying at something like 6 or 7 times earnings with high margins, double-digit growth. I mean, it just made absolutely no sense, and it dropped. I was down a lot of money on this. That's the way it works in the stock market sometimes. I held on. And for everyone with Kohl stock right now, it could get uglier, it could get better, I really don't know. I know some people, when they see such a deep value opportunity like Kohl's, they're tempted to buy options on the stock, they're tempted to buy calls. I'm not saying that's a bad strategy. It certainly could work. You could make a ton of money doing that. But for me, I just like owning the equity. It's hard enough in the stock market to know the direction that a stock is going to go up or down over time. When you buy options, you not only need to be right about the direction that a stock moves, you need to be right about the time. If you buy calls on Kohl's, you need Kohl's stock to go up within a certain period of time, or else you could lose the entire value of your option. So that's just me. That's what I'm doing. Another thing to note that I found interesting, Morningstar, which is one of the most well-known sell-side and analysis places out there, they think that Kohl's fair value is $40 a share. They're basically saying Kohl's is worth 5 times as much as it's trading for right now. I think this might make Kohl's stock, in the eyes of Morningstar, basically the most undervalued stock in the stock market. I mean, basically, they just go through all of pretty much the bad things about Kohl's, how Kohl's has stagnant revenue, their sales per square footage of store space is not quite up to their peers, and then they basically say, yeah, fair value, $40 a share. I think they basically agree, at least I think this analyst agrees, that the sentiment around Kohl's stock is just so bad that their price is pretty divorced from the value. Anyway, that's it for this update on Kohl's. When they release their next earnings, we're going to look at it again, but it's probably going to be pretty quiet. There probably won't be any catalyst or any big news on Kohl's until their next earnings report. And that's a lot of what investing is. It's buying what you think is undervalued and just sitting there. And if you got something out of this video, subscribe to the channel, leave a comment down below. Let me know if you agree with me, if you disagree with me on Kohl's. Do you own Kohl's stock? What do you think about this thesis? We recently hit 200 subscribers on this channel, so thank you to everyone who has subscribed, and I hope to see you in another video.